Hi everyone, welcome to Stock Insights. Today we're diving into Crown Crafts Inc., ticker CRWS, a small cap in baby products. With a stock price around $3, is it a hidden gem or a pass? We'll cover pros, cons, financials, dividends, and future outlook. Crown Crafts, founded in 1957, operates through subsidiaries like Nojo and Sassy. They focus on licensed products with partners like Disney, pros, strong recognizable brands, high dividend yield, about 10.6%, positive cash flow, roughly $7 million covering operations. Cons, a $9.4 million loss in 2025, heavy reliance on China amid rising tariffs, and tough competition from giants like Carter's and Munchkin. Profit margins have cratered, net margin fell to negative 11.7%, down from plus 11% in 2022. Retail slumps and one-time expenses drove much of the decline. Debt stands at $26 million, with a debt-to-equity ratio of 69%. Cash flow of $7 million covers payments for now, but it's tight. Side income is mostly negative, $13.8 million in unusual expenses dragging results. Can they pay debts? Yes, with operations, but they must return to profitability. Quick recap: negative margins, moderate debt, tight cash flow, and heavy one-time charges pressuring the balance sheet. Since their IPO, Crown Crafts peaked at $877 in 1998. Long-term returns have disappointed, lagging the S&P 500. Adjusted for inflation, investors have lost ground. Risks: lower birth rates, trade wars, and economic slowdowns. Potential catalysts include acquisitions like Arc Group and a push into digital sales. Sustainable products and e-commerce trends could help, but execution is key. Crown Crafts pays a 32-cent annual dividend, yielding about 10.6%. But the payout ratio is 133%, unsustainable without profit recovery. Short-term, the stock is down 43% over the last year. Long-term returns are just 2 to 3% annually, far behind broad indices like the S&P and NASDAQ. In short, attractive yield but risky payout. Index investing offers more stability. So, will CRWs hit $1,000? Highly unlikely, too small and too many hurdles. Short-term, steer clear due to ongoing losses. Long-term, it's a speculative buy for dividend lovers, only if margins recover. Compared to indices, stick with the S&P 500 for stability unless you accept high risk. That's it for today. Like and subscribe for more stock analyses. What stock should we cover next? Drop it in the comments.